Hello, my brothers and sisters. How are you guys doing? Hope you guys are doing amazingly well. Yeah. So, let's start the revision of chapter 6A deduction. Yeah. So, first, there are in chapter 6A deduction, there are two kinds. One, it is payment based deduction. Second, it is income based deduction. Regarding payment based deduction, it starts from section 80C and 280 GGC and also 80U. But when it comes to income deduction, it is starting from section 80IA to section 80 RRB. Next, this deduction, when will you deduct? You will deduct. First, you will calculate the gross total income. Then you will deduct chapter 6A deduction. Yeah. Then you will arrive at total income. And this chapter 6A deduction, what will be the maximum amount? The maximum amount will be, it is restricted, it is limited, or it is restricted to this gross total income. You can, gross total income cannot be, for example, 10 lakhs and chapter 6A deduction will be 12 lakhs. No. Gross total income will be 10 lakhs. Then maximum chapter 6A deduction also will be maximum 10 lakhs. Because if you say that can you say total income is negative? Can it be negative? No. And can you do the carry forward? Nothing. If total income will be nil, total income cannot go for a negative toss. Yeah. Yes. So that means gross deduction cannot exceed gross total income. And also in the gross total income, in this you will not include long-term capital gain, also section 112 and section 112A, and also short-term capital gain under section 111A, and any special rate of tax you will not include. Yes or no? Yes. And so payment based deductions, how will you do this? Payment based deduction will be based only and only on the payment basis, not on accrual basis. Yes. So during the previous year, if you do the payment basis, yes. And also you make sure that in the return of income, when you file these and all are my gross total income, you should also mention what and all are the deductions you are going to claim to arrive at the total income. So you have to claim in the return of income. If you fail in claiming, in mentioning or claiming the chapter 6A deduction in the return of income, you cannot claim deduction. Yes or no? Yes. And make sure that you have to opt out of default tax regime. Only there are three sections you can claim chapter 6A deduction if you choose new tax regime, default tax regime. Apart from that, all the deductions you have to choose default. You have to opt out of default tax regime. Section 80C. Yeah. So investment, if you are if you make, whether you are making it out of a taxable income or exempt income, you can make any income, but you can claim deductions where regarding following investments. There are few selected investments you can make. Yes, but the assessee should be individual or HUF. You can be a resident, non-resident, it doesn't matter. But section 80C maximum deduction is 1,50,000 rupees. So what and all are the following deductions? One, life insurance premium. So if the policy is issued before 31st March 2012, then the premium paid should be up to 20%. If it is on or after 31st on or after 1st April 2012, then it is 10%. And in case of disability, if he is a disabled person and the policy is issued on or after 1st April 2013, then 15%, up to 15% premium if you are paying. Then for this life insurance premium, you get the premium paid or the maximum amount. So if you exceed 10%, 15%, 20% as per income from other sources, of course it will get taxed. And also you for the premium paid you can claim deduction under section 80C. But if it exceeds 10%, 15%, 20%, that excess should be ignored. Yes or no? Yes. And this particular life insurance, if you're taking for self, for your spouse and for your children, it is included. And also if for HUF, the members of the HUF. Next, contribution to the ULIP, unique linked insurance policy, for the individual himself, for the spouse, for the children and the members of the HUF. Next, contribution to statutory provident fund, contribution to recognized provident fund, contribution to public provident fund, contribution to approved superannuation fund. For all, for himself, but for public provident fund, for his spouse, for his children, and for the members of HCF. Yes or no? Yes. And deduction regarding the premium paid for the deferred annuity. So whether if you are making payment, what is deferred annuity, sir? You are making you are making payments now. So at one point of time you will be getting monthly annually some small amounts. Yes, this is deferred annuity. So this is for individual himself, the spouse or the children. You are taking the policy. Yeah, and if he is a government employee, then from that salary, if up to one fifth of the salary amount, up to one fifth of the salary, you can go for a deferred annuity. More than one fifth, you have to ignore. Next, if you are making a term deposit in any scheduled bank, minimum period should be 5 years. If you are making term deposit in post office, minimum period should be 5 years. And senior citizen savings scheme, if you do, you can do it. But what should be the minimum period? What should be minimum period? I told you, term deposit and everything, 5 years. So what if you withdraw it within 5 years? If you withdraw it within 5 years, then how much amount you have deposit? How much amount you have deposited in this fixed deposit? It will be taxed. It will be taxed. But in case of death, the legal representative can withdraw it. Then it will not be taxed. Next, tuition fee. Whether school, university, college, or any education institute within India, if you are paying for the tuition fee, it is what you can claim deduction. But maximum how many children? For two children for full time education. Yes or no? Yes. And Sukanya Samriddhi account scheme. What is this? For small children. If you are depositing some amount, then also how much amount you are depositing, it will be what you can claim exemption. And when you withdraw it, when you withdraw from that amount deposited, which is when you are receiving the amount, it is fully exempt also. Next, if you are subscribing to the notified bonds of NABARD, notified units of mutual fund or unit trust of India, then notified deposit scheme of public sector company and authority constituted in India with respect to the housing and nation saving certificate. If you subscribe to this, then you can claim deduction under section 80C. And also approved annuity plan of life insurance company or any other insurance company. Then pension fund of mutual fund or unit trust of India. Then National Housing Bank term deposit and National Pension Scheme NPS tier 2 for what? For central government employee. Yeah, for you can claim deduction under section 80C. Next, if you have taken a residential house for what? For purchase or construction, and you are making you are taking that loan for that, and you are repaying this loan. You are repaying this. You can take loan from bank, government, National Housing Bank, LIC. Yes, and also from the employee of public sector company and cooperative society. No problem. You can claim deduction. You can claim deduction, but what? You can claim principal amount deduction, not interest amount deduction. Interest amount deduction you will claim in section 24B. Yes or no? Interest based deduction you claim in section 24B for in under the head income from house property. Principal payment you will take this. Yes or no? Yes. And stamp duty, registration fee, or any other expense for purchase of house property, you can claim deduction under section 80C. Yes or no? Yes. This is an additional deduction. Next, so these and all are the kinds of investment if you make. These and all are the kinds of investment if you make in under section 80C. Then you can claim for as an individual or HCF up to 1,50,000 rupees. Next, section 80CCC. This is for what? Pension fund of LIC or other insurance company. So what about pension fund of mutual fund or unit trust of India? Section 80C. This is pension fund of LIC or other insurance company. who should be the assessee? Individual should be the assessee, and he's contributing to the pension fund of LIC or any other insurance company. He can claim maximum 1,50,000 rupees as deduction. Yes, and if when he receives the amount, it will get taxed on him. Next, section 80 CCD, where this is what NPS, also called as Atal Pension Yojana. Yeah, so if the assessee is an individual, if the assessee is an individual and he is contributing this to this NPS, he is contributing to this NPS, then in that situation there are two kinds of things that can happen. One, he can be an employee. Two, he can be a not an employee. Yes or no? One, he can be an employee. Two, he can be not an employee. If he is an employee, then if he is an employee, then as per section 80 CCD1, section 80 CCD1, what is the employer how much is the employee contributes, or his 10% of the salary. What is the salary? We'll say basic salary plus dearness allowance in terms. So this amount, from this the 10%, okay, so 10% of salary amount, employee contribution, whichever is lower, this is section ACDDD1. But if he is not an employee, then the assessee's contribution, what is his actual contribution, on 20% of the gross total income, whichever is lower, yes or no? Yes. Now let's say he has contributed contributed how much? 1,45,000 rupees. 1,45,000 rupees. And what is his gross total income? His gross total income is 5 lakh rupees. So 20% of gross total income is 1 lakh. So whichever is lower, how much will be deducted under section 80 CCD1? In 80 CCD1, it will be deducted as 1 lakh rupees. Yes. Then comes 80 CCD 1B. What is 80 CCD 1B saying? You can claim an additional 50,000 rupees. So how much did he contribute? He contributed 1,45,000 rupees. So from 1,45,000 rupees minus 1 lakh, how much is coming? 45,000 rupees. So maximum he can claim additional how much? 50,000 rupees. So because of this, he can claim what? 45,000 rupees. Maximum additional maximum 50,000 he can claim, but he can claim 45,000 rupees as per section 80 CCD 1B. Yes or no? Yes. And if the employer contributes in national pension scheme, then in that situation, it is 14% of 14% of, come on sir, 14% of salary. Salary includes basic salary plus dearness allowance in terms. But if he is a non-government employee, plus if he has chosen old tax regime, if he is a non-government employee and if he has chosen old tax regime, then for him up to 10% of the salary, he can claim as deduction under section 80 CCD 2. Yes or no? Yes. Next, if the assessee in this NPS, if the assessee in the NPS, if he says enough, I'm closing the account, I'm opting out of the scheme, then it is up to 60% is exempt, 40% becomes taxable. How much amount he is receiving from that account, 60% of the amount is exempt, 40% becomes taxable. But he is not closing it. He is not saying I'm opting out of the scheme, but he is withdrawing it. How much? Partially, not fully, partial. If he is withdrawing fully, because he is closed, he is opting out of the scheme, he is withdrawing partially. So how much he is withdrawing? Partially, up to 25% is exempt, remaining 75% is taxable. But if he is a non-salaried employee, then it is fully 100% is taxable. Yes or no? Yes. Next, contribution to Agnipath scheme. Who's this Agnipath scheme? After school, the person goes to the military, yes, for 4 years. This is an Agnipath scheme. So any individual who's enrolled in this Agnipath scheme on or after 1st 11/2022, for them that particular Agnipat, those employees, if he contributes to this Agnipat scheme, how much he will contribute? 30% of his monthly package, and also central government also will contribute 30%. Yes, but when it comes to central government, it will be included. It will be included in the salary head. From that they will reduce. From that they will reduce this 30%. So the 100% will be there in the salary, but in this 100%, 30% is what? 30% is this contribution of central government's contribution to Agnipat. Yes, from the 30% will be reduced. Yes, yes. This is 80 CCD. So ACCCH2, yeah, and any amount received now, the amount the employer, sorry, the Agnipat and the employer, how much they have put in, they now he's receiving it. It is fully exempt. Yeah. So, what is section 80D, sir? So it is regarding medical insurance and the medical treatment. Yeah. So if an assessee who is either an individual or HUF, he is spending money on the health insurance or central government health scheme or preventive health checkup for himself, for his spouse, for his dependent children, and or his parents, whether dependent or not. And in case of HUF, the members of the HUF. Yes. So in this situation, you have to see. We have to see what I have also given you an example. You have to see what is the limit. Limit is 25,000 rupees for what? For health insurance and preventive. Sorry, health insurance and central government health scheme. For these two, if you are spending the premium, this is the amount. So for self, for the spouse, and for the dependent children, in aggregate, it should be how much? Maximum you can claim deduction under section 80D is 25,000 rupees. And for parents, how much you can claim? You can claim another 25,000 rupees. But if you or your spouse or your parents are senior citizens who is a resident, then in that situation, instead of 25,000, it can go for 50,000. Instead of 25,000, it can go for 50,000 rupees. Yes. Yes. Next, there is preventive health checkup, which is also from this, in this 25,000, 50,000, that is also included. But preventive health checkup is maximum 5,000. You can claim deduction of maximum for 5,000 when it comes to preventive health checkup. But preventive health checkup you can pay in any mode, also in cash. But health insurance and central government health scheme, you should pay only through any mode other than cash. If individual for himself, for his spouse, and for his parents, where he has not taken medical insurance, but there is a medical treatment is taking place, then he can claim deduction of rupees 50,000 if it is a resident senior citizen. Yes, sir. And if the mediclaim is in lump sum for more than 1 year, you have paid in lump sum the medical insurance, then in that situation, for each year, deduction will be the lump sum amount divided by for number of years the claim is for. So in starting from the previous year in which the insurance will be in force, from that year to how many years the insurance is available, you should divide it by it. For each year it will come. Yes or no? For example, for 5 years, let's say the lump sum amount is 5 lakhs. And next, section 80DD, this is for what? This is for dependent disabled. Yes or no? Yes, sir. So if the assessee is an individual and HUF, yeah, and he is a resident of India, so for this particular assessee, his spouse, his parents, his children, his brothers and sisters who are wholly dependent on him, and also they are disabled, Yes, in this situation, they should not claim deduction under section 80U. Yeah, deduction under these particular person, if they are not claiming deduction under 80U, then for them being disabled, the medical treatment or any amount paid for life insurance policy or any other, not only life insurance corporation or any other insurer also, you pay a insurance amount, you can claim a flat deduction of 75,000 rupees. But if you are severely disabled, which is 80% or more, then it will jump to 1,25,000. Yes or no? Yes. Now you claim deduction for this. Now you for this medical insurance, you are receiving that amount. You are receiving that amount. So in which year you are receiving, it will be taxable when not because of the death and also not because you are becoming a senior citizen. In if these two conditions are satisfied, you will be getting you will be taxed. So if you die or if you become a senior citizen and then you are getting, for that you are getting the amount received from the insurance, in that situation it will not be taxable. Next, section 80U. If the resident individual for his medical treatment or for his premium of insurance he is paying, then for him also directly 75,000 rupees, or if it is a severe disability of 80% or more, it jumps to 1,25,000 rupees. So yes or no? Yeah. For this, you have to furnish a certificate issued by the medical authority, and in the return of income also you have to mention that yes, I am disabled and I am claiming section 80 DD or section 80U. Yes. And if reassessment is required by the income tax authority, then again you have to get a fresh certificate from the medical authority. Yes. Next, section 80 DDB. What is this? This is applicable for assessee who is an resident individual or HUF and for their spouse, for their children, for their parents, and for their brothers and sisters who are wholly dependent on them, and also for the members of the HUF. For this medical treatment which is prescribed, such as there's a list of medical treatments such as cancer, tuberculosis, and all. So for this medical treatment, the following doctors such as neurologists, oncologists, urologists, immunologists, hematologists, if they have given the prescribed treatment, then what is the actual treatment incurred? Or 40,000 rupees. Yes, but if he is a senior citizen, this 40,000 will get increased to 1 lakh rupees. Yes, sir. Yes, and in case insurance amount is received, you have to reduce from that. You have to reduce what is the insurance amount received from that. Yes. Section 80E, interest on loan for higher education. So if the individual assessee is getting education for himself, for the spouse, or for his children, in case assessee is a legal guardian for that child, even that particular assessee also can claim deduction. Yes, for them to get the higher education, what are they saying? The assessee is taking loan from the bank, financial institution, or approved charitable institution. Yes, and for this he is paying interest. For this he is paying interest. Yes, it will be for 8 years. For 8 years from the interest, from when the year from which interest is paid till 8 years, you can claim deduction. You can claim deduction under section 80EE. 80E. What is section 80EE? For the individual where for purchasing the house property he has taken loan. Yes, for this he can claim maximum deduction of 50,000 rupees. Yes or no? Yes. For this, two conditions should be satisfied. First condition regarding the loan, where he should have taken loan from the bank or financial institution. He should have taken for the he should have sanctioned the loan in the financial year 2016-2017, and also amount of loan should not exceed more than 35 lakh rupees. And second, regarding the residential house property, the value of the house property should not exceed 50 lakh rupees, and on the sanction of the loan he should not own any other house property. If these two conditions are satisfied, for the interest on the housing loan he can claim deduction of 50,000 rupees under section 80EE. Yes or no? Yes. And regarding section 80EA, for the individual also can claim deduction for purchase of house property, but maximum of 1,50,000 rupees. How? Two conditions are to be satisfied. One, regarding the loan, he should have taken a loan from the bank or financial institution, and he should have sanctioned the loan for the from the financial year 2019 to 2022. Yes, if these conditions are satisfied, one second condition, residential house properties stamp duty value should be up to 45 lakh, and also he should not own any other house property on the date of sanction of loan. He should not be holding it. If these two conditions are satisfied, he can get a deduction of 1,50,000 rupees. And when you are make sure that when you deduct section 80 or 80 you should not have already take this deduction in any other provision of this income tax act. And the first priority is always section 24B. The first priority is always section 24B. If some remaining amount is left, then only you should be using 80 or 80 Yes, sir. Next, what is 80 It is loan taken for the motor electronic vehicle. Yes. So if the assessee is an individual and for the purchase of the electronic vehicle, he has taken loan from bank, financial institution or an NBFCs. Yes. And this is sanctioned between 1st April 2019 to 31st March 2023. In this situation, for this interest, he can claim a maximum deduction of 1,50,000 rupees. Yes, sir. Yes. And what is section 80G? You have to give respect because G, you are giving donation. Thank you. So 80G donation. So it is applicable to which assessee? Any assessee. Yes or no? Yes. And for this, what are the kinds of donation? There are 4 kinds of donations. This 4 are in 4 ways. List A, List B, List C, List D. List A. There are some set of donations, list of donations. How much ever you contribute to this donation, 100% is allowed as deduction. List B. How much this is Prime Minister Drought Relief Fund. To this fund, how much you are investing, how much you are donating. 50% is only taken as a deduction under section 80G. Yes or no? So if you have given 1 lakh as donation, you will get 50,000 rupees will be deducted under section 80G. List C. In list C, what is the donation, how much you are giving, 100% you can get, but there is a limit. For example, the limit you are within the limit, fine. If you are more than the limit, then you are within that limit you have to do. Yes. And list D, how much you are donating? 50%. How much you are donating? 50% is only deductible, but there is also a limit. So what is this limit, sir? This limit is called as qualifying limit, where donation under list A plus donation under list C plus donation under list D, you combine, add, so a total will come, and you also should see 10% of adjusted total income. So you will see both this one, list C and list D donations. Next 10% of adjusted total income you will see. In this, whichever is lower you will see. So whichever is lower, that will be your limit. That will be your limit. From that limit, you have to adjust list C, because it is 100% deduction. Then if there is anything remaining in that limit, then you will be adjusting list D. Yes. So what is adjusted total income? Gross total income minus long-term capital gain under section 112 minus long-term capital gain under section 112A minus short-term capital gain under section 111A minus chapter 6A deduction except section 80G. This is the adjusted total income. So we in our example, let's say the adjusted total income. This you did the calculation and it is 20 lakhs. Adjusted total income is 20 lakhs. Okay. So 10% of 20 lakhs, how much, sir? 2 lakhs. 10% of 20 lakhs is 2 lakhs. And list C is 1 lakh and list D is 2.5 lakhs. So which is totally 3.5 lakhs. So 3.5 lakhs or 2 lakhs, whichever is lower. What is lower? Lower is 2 lakhs. So 2 lakhs is the qualifying limit. So from this, what will you first adjust? You will first adjust list C. List C 1 lakh you adjusted. Then there is list D. Then there is list D. How will you adjust this list D? First, you will adjust list C. Then what? If you have adjusted list C, how much is from this qualifying limit? How much is there? Remaining 1 lakh is there. And list D, how much you can claim deduction? List D, how much you can claim deduction? 50% you can claim deduction. So they are in list D, they have donated 2,50,000 rupees. 1 lakh 20 in the 50% is 1 lakh 25,000. So, but how much remaining is there? Remaining is 1 lakh. Remaining is 1 lakh. Yes or no? But from 1 lakh, if you compare, how much extra is there? Donation, you can claim deduction 25,000. This 25,000 you have to ignore. Yes, sir. Next. If you made a payment of more than 2,000 rupees in cash, you cannot claim deduction. If you make payment in kind, you cannot claim deduction. If you have already taken deduction regarding this donation in any other provision of this act in this year or in the other assessment years, you cannot claim deduction. If you have given donation to unregistered trust or institution, you cannot claim deduction. And also, if what donor can claim deduction when if the donee has given that yes, donee has given a certificate or bill that yes, he has given me so and so amount of money, like that certificate is a proof. That's always should be there. Then only he can claim deduction. Yes or no? Yes. So section 80GG. What is it, sir? It is deduction on rent paid. Yes. For whom it is applicable? For any assessee for whom? For any assessee who is an individual for whom non for whom house rent allowance is not applicable. Yes or no? In this situation, you have to see where he is doing business or profession or where he is doing his employment. He is owning any residence in there. He is not owning residence and he is also paying rent for it. He can claim deduction under section 80GG. But let's say he is owning any house property anywhere else. Is he claiming self-occupied property benefit, which is interest on house property under section 4B? Is he claiming deduction for that? He should not claim deduction for it. If he is not claiming deduction for this, then he can claim deduction under section 80GG. Yes or no? What is the deduction? Amount of rent minus 10% of adjusted gross total income, or 5,000 rupees per month, or 25% of adjusted gross total income, whichever is lower. Yes, and how we calculated 80G adjusted total income is the same, only is except 80GG. Instead of except 80G or except 80GG, because we do not know what is the deduction for 80GG. We are except then from that we have to do the same adjusted total income calculation same as 80G. Yes or no? Yes. What is section 80GGA? What is section 80GGA? This is applicable for any assessee who is not who in his total income there is no head called as PGPP. Yes, and this particular assessee is paying for a research association, university, college, or other institution for scientific research, statistical research in social science, or association institute for carrying out the program of rural development, national urban poverty eradication fund. For these kind of association, universities, or institutes, if the assessee is paying, yes, 100% deduction is allowed. Yes, but if the amount paid is more than 2,000, he should make payment other than cash. He should not make payment in cash other than cash. Then only he can claim deduction. Yes or no? What is section 80GGB GGC? Donation to political party or electronic fund. Yes. So section 80GGB is assessee who is an Indian company. Section 80GGC is any person other than individual. Sorry, any person other than Indian company, a local authority, or artificial judicial person by the government. Yes or no? Yes. So if these assessees in 80GGB or 80GGC, these assessees, if they are paying, if they are contributing to the political party or electronic trust, they should make only by any more other than cash. That's a deduction they can claim. Yes, 100% deduction. Next, what is section 80 JJAA? This is where if the so if the employer is recruiting new employees, he can claim 30% deduction of that employee cost. Yes or no? Additional employee cost he can claim. Yes, but for this, who should be the assessee? He should be carrying on business, not profession. And this business you should make sure that he is not acquiring a business. He should set it is a very new business. Yes, or he should not split, or he should not do the reconstruction of the existing business. This is one condition. And second condition is 44AB tax audit should be done by this assessee. Yes, for him, if cost is incurred for the employment, for the cost is incurred for employing a new employees, yes, he can claim 30% deduction. Yes or no? Yes, but for this, two conditions should be satisfied. First condition is what? He should during the previous year he should employ new employees. During the previous year he should employ new employees. Second one is from the preceding previous year and the current previous year, there should be increase in the number of employees. Let's say in the preceding previous year, the employment was 300. In the current previous year, it should be more than 300. Yes, it should not be from the preceding previous year, it was 300. In the current previous year, in the preceding previous year, there was 300. And I have removed in that preceding previous year and current previous year also I have reappointed somebody or I appointed newbody. No. Preceding previous year, if it is 300, there should be an increase. What is the increase? For that only you can for those employees you can claim 30% reduction. Yes or no? Yes. And you should make payment other than cash, cross check or bearer check, which is account pay check, account pay bank draft, ECS, IMPS, RTGS, UPI, net banking, debit card, credit card, or Bhim Aadhaar Pay, which is you should not make payment by cash, bearer check or cross check. Yes or no? Yes. And these employees should be or getting a salary of how much? Up to 25,000 rupees per month. Yes or no? Yes. And also they should be working in this place for how much? Minimum 240 days. But if it is of manufacturing of apparel, footwear or leather products, 150 days is sufficient. 150 days is sufficient. And they should be participating in recognized provident fund. Yes or no? Yes. And any lump sum payment regarding termination, superannuation, voluntary fund, which is retirement benefit salary is included, will not be forming part of this deduction. 30% deduction will not be formed. Yes or no? You only for during the previous year how much amount he is getting a salary, that should be done, not for the retirement benefit how much I'm giving, whether gratuity, leave encashment, pension, this all will not be included. Yes or no? Yes. What is section 80 QQB? Royalty of books. Yes. What is the royalty of books they are talking about? If I have given copyright, yes, and he can sell my books, in that situation he will give me a lump sum payment. Yes, this lump sum payment or 3 lakh rupees, whichever is lower, I can claim deduction. This is one situation. Second situation is where I am keeping my copyright with me, but he is selling the books. In this situation, how much for each and every single book which he is selling? Maximum 15% minus expenses. So royalty income is royalty received, but maximum how much for each book? 15%. Minus what and all is the expenses. Yes, that is the royalty income. So royalty income or 3 lakh rupees, whichever is lower, I can claim deduction. Yes or no? Yes. For claiming this deduction, I have to I have to certify that I have received royalty, and who paid me royalty, he also should verify it. Yes or no? Yes. And any amount from outside India, if I am getting it, I have to convert this into convertible foreign exchange within 6 months. within 6 months, or I can increase more. It can be more than 6 months also. Let's say 10 months, 12 months also. It can happen if what should I do? If the competent authority has given the power, okay, it's okay, more than 6 months also, he can convert it and he can bring back to India, no problem. Then you can do it, yes or no? If yes. Royalty on patents. If I'm getting consideration for transferring the right of patent, or providing information, or use of the patent, or also rendering services regarding the connection of any services with regarding the patents. Yes, so patents, for the purpose of patent, I'm getting consideration. Yes, so what is the royalty I'm getting? Minus 3 lakh rupees, whichever is lower will be my deduction under section 80 RRB. Yes or no? Yes. Now, what is section 80 TTA and TTB? 80 TTA is applicable for assessee who is carrying on individual or HUF. Yes, but for senior citizen, citizen who is a resident, it will be section 80 TTB. Yes. So 80 TTA is for individual and HUF other than resident senior citizen. Yeah. So what is the interest paid, or what is 10,000 rupees, whichever is lower? What kind of interest? SB interest on scheduled bank, cooperative bank, and post office. And what about if a person is resident senior citizen? For him, any deposit in the scheduled bank, cooperative bank, or post office, any deposit, yes. So interest paid or 50,000 rupees. 80 TT it is up to interest paid or 10,000 rupees. Here it is 50,000 rupees. Yes, 50,000 rupees. So 80 TT it is 10,000 rupees. Here it is 50,000 rupees. Yes or no? Yes. And in this direction, for new tax regime, only three deductions can be claimed. One is 80 JJAA. Next is what is 80 JJAA? Employment, recruiting the new employees. Yes. What is section 80 CCD2? Employer contribution on new pension scheme. Then 80 CCH2, central government contribution to Agarwal. Yes or no? Yes. Agnipat. This is for these three only. If you choose new tax regime, otherwise old tax regime only, you should choose to claim deduction. So what is section 10 AA? If you are having an SEZ unit and you are manufacturing any article or thing, or you are having a computer software, yes, and you have started manufacturing from 1st April to 2006 to 31st March of 2021, then in this situation you can claim section 10 AA. You can claim section 10 AA, but you should not form a business on splitting up or reconstruction of business already in existence. It should be a new business which started from 1st April 2006 to 31st March 2021. In this situation, for the first 5 years, you can claim 100% of the export profit. For the from first 5 years, 100% of export profit. From 6th year to 10 years, 50% of export profit. From 11th year to 15th year, it is 50% of export profit or amount we have credited to SEZ reinvestment allowance reserve account, whichever is lower. Yes, for example, in the 11 to 15 years, 50% of export profit is 200 crores, and how much amount you have credited to the SEZ reinvestment reserve account is 150 crores. What is lower? 150 crores. 150 crore, you can claim deduction. Yes or no? Yes. Now, what is this export profit? What is the PGBP net profit income into what is the export profit divided by total turnover? So export turnover divided by total turnover. So what does this export profit mean, sir? So what is the export turnover means? Export turnover means how much amount you have exported within 6 months, or within 6 months of the end of the previous year. So, for example, you have exported this in this previous year on 1st of April. What is the end of the previous year? Is 31st March. 31st March plus 6 months, which is 30th September of the assessment year. Within this within 6 months of the end of the previous year, you have to bring back money. Yes, and this export turnover will not include freight, insurance, telecommunication insurance, and also expense for service outside India. Yes or no? Yes. Even total turnover also will not include freight, insurance, telecommunication, and expense of service outside India. Yes, sir. Please. I think I did not mention this. Even total turnover also will not include this. But then, what will total turnover include, sir? It will include the what is the domestic turnover, and it will also include export turnover. Whether you have convertible into foreign exchange also, and total turnover include all the turnover, but except this, except freight, insurance, telecommunication, or service for expense for service outside India, export turnover. Yes or no? Yes. Next, uh, duty drawback, profit on sale of import entitlement. Whether it is export turnover or total turnover, it will not be included. Yes or no? Yes. So what if instead of bringing back the money within 6 months, what did I do is I have set up a bank account, the assessee's name itself, I have set up a bank account outside India, and I got the approval of RBI. Is it okay? Should I bring back the money also? No, not required. If this condition is satisfied, if you do the export and the money, if you put it in that bank account outside India, which is approved by the RBI, it is deemed that it is received in India. Yes. Now, amount you have credited in the reinvestment allowance reserve account, that amount, what should you use for? This amount is used only and only for acquiring the plant and machinery and putting it to use. Acquiring the plant and machinery and putting it to use. And that too, this has to be acquired and put to use within 3 years from the end of the previous year in which the reserve was created. When reserve is created, within 3 months, you have to acquire the plant and machinery and put to use. Yes, and up to 80% can be new plant and machinery, which is 20% can be second hand plant and machinery, no problem. And that too, you can, so example, from 100% plant and machinery, 20% can be second hand plant and machinery, no problem. And in this 80% also, if you are able to bring, if you are used in for outside India, it is a second hand plant and machinery. But in India, when it comes to in India, you are importing to India, it is used for the first time, no problem. It is used for the first time, then it is no problem. Yes or no? Yes. You have to give the details of the plant and machinery, who is the supplier, and when was the date of acquisition and date of put to use on plant and machinery. All this you have to give. Next, so what if you did not use that reserve for purchasing and putting to use the plant and machinery, or after 3 years only you have purchased it? Then in that situation, the amount is considered as deemed income, where you have, instead of purchasing the plant and machinery, you use it for something else. In which year you have used it for something else, that in that year it will be considered as income. You have to pay tax. For 3 years you did not, within 3 years you did not purchase the plant and machinery. Fourth year it will be considered as deemed income. Yes or no? Yes, sir. First claim deduction under chapter 6A, then only you can claim deduction under section 10AA. You have to file the return of income. Yes, that this is on 31st of October, and also you have to give a tax audit report. This is before, on or before 30th of September. If amalgamation or demerger takes place, then or in which previous year amalgamation or demerger is taking place, from that year onwards, section 10AA will not be claimed by amalgamating or amalgamating or demerged company. The 10AA will be claimed by whom? Amalgamated or resulting company. Yes or no? Yes. For the balance, how much portion is there? For that portion, 10 AA can be claimed. Yes, sir. Yes. If you claim 10 AA, then you cannot carry forward unabsorbed depreciation, family planning, and also scientific research. Yes. Next, capital gain loss also you cannot carry forward, and business loss also you cannot carry forward. And Section 35 AD deduction also you cannot claim in either in the same previous year or also in the other previous year also. Yes or no? Yes. Like this deduction is over. What is AMT, sir? Alternate minimum tax. Yeah. So when is alternate minimum tax applicable? It is applicable to all a person, which is any person other than company. Why not company? Company for the MAT is applicable. Okay, this you'll see in CA final. So it is applicable to any person for whom they who claim deduction under section 80 JJAA, 80 QQB or 80 RRB, and they claim deduction under section 35 AD also, or they claim deduction under 10 AA. So these person who is claiming deduction under any, if they are claiming any of these deductions, yes, and they are adjusted to second condition. If the person is an individual, HCF, AOP, BOI or artificial judicial person, and their adjusted total income is up to 20 lakhs, up to 20 lakhs. Third condition, they have chosen old tax regime, not default tax regime. They have chosen old tax regime. In these cases, AMT will be applicable. Yes, this is kind of an income tax. So for whom AMT is applicable, you will generally first calculate the income tax. Normal, how you will calculate income tax? Yes, or next, second one you will calculate is 18% of adjusted total income. What is adjusted total income, sir? First, you will calculate normally. How will you calculate total income? Then you will, if you have claimed deduction under section 10 AA, you will add back. If you have claimed deduction under section 10 JJAA or 80 QQB or 80 RRB, you will add back. Or if you have claimed deduction under section 35 AD, you have add back. Remember, if you claim deduction under section 35 AD, then you should not claim deduction under section 32 depreciation. So because you are now not claiming deduction under section 35 AD, for this particular 35 AD, you claim deduction. Depreciation deduction you will claim. Yes, this is what is adjusted total income. From this adjusted total income only you are going to see whether adjusted total income is up to 20 lakhs or not. Yes, sir, adjusted total income is up to 20 lakhs only. Then in that situation, 18.5% of adjusted total income you can claim. Yes, 18.5%. Yes, sir. So now you will see normal income tax or 18.5% of adjusted total income, whichever is higher. Whichever is higher, whatever is higher, then you'll do the surcharge calculation if any, and 44% of health and education cess you'll calculate. This is your income tax payable. Yes, sir. Yes. Next, AMT credit. When will AMT credit be there, sir? If 18.5% is more than income tax payable, then AMT credit will come into the picture. Yes. So because 18.5% is more than the regular income tax, what is the difference is the AMT credit. Yes. And what is the use of this AMC credit? You can set it off for 15 years. You can set it off for 15 years. How will you set off? In the next assessment years, if the regular income tax is more than AMT, then you can set off. Then you can set off this AMT credit. Yes or no? Yes. And when you are setting off, you don't have to see whether AMT is applicable or not. Nothing. If AMT of, let's say, the adjusted total income is up to 20 lakhs, or if they have not claimed deduction under section 35 AD, 10 AA or 80 QQB, 80 RRB or 35 AD, no problem. AMT is not there, but still you can set it off the AMT credit. Yes or no? Yes. For AMT credit, you have to make sure that in the audit report, you have to see where you have to tell that AMT and adjusted total income is correctly calculated, and this you have to furnish on the tax audit report day, that is on or before 30th of September of the assessment year. Yes, sir.